What's happening, guys? Today we're going to calculate fully amortized loan payments on the BAII Plus Calculator. So for our first example, let's say you receive a fully amortized 5-year loan for $100,000 at an interest rate of 6%. Payments for this loan are made annually. What's the dollar amount of each payment? Here we have a 5-year loan with one payment made each year. So we have a total of 5 payments. To enter this, we press 5N. Next, we'll enter the interest rate. So we press 6IY for interest yield. Now, we'll enter in $100,000 and press PV for present value, for the present value of the loan. The future value of the loan will be 0 because we're going to pay this loan down to 0, making it fully amortized. So we'll press 0FV, setting the future value to 0. Now, we want to compute the payment, so we'll press CPT, then PMT. And we see here that our payment is $23,739.64. Now this was a very straightforward example, an example that you won't see too much in the real world because for most loans, especially for personal finance, payments are made monthly, not annually. So let's do an example where a payment will be made monthly. Here you obtain a fully amortized 30-year mortgage for $100,000 at an interest rate of 6%. Payments for this loan are made monthly. What is the dollar amount of each payment? In this example, we'll need to keep in mind that we're entering the number of payments. We have a 30-year mortgage with 12 months in each year. So the number of payments is 30 times 12. And we'll also need to adjust the interest rate. Interest rates are quoted annually, so we'll take 6% and divide that by 12 and get 0.5%. Here's how we'll enter these figures into the calculator. We'll take 30 times 12 equals, then press N to set the number of payments. Then we'll take 6 divided by 12 equals IY to set the interest rate. Now we'll set the present value of the loan at $100,000. So we'll press 100,000 PV. We'll set the future value to 0 again because we're paying this loan off completely. So we press 0 FV. Now we'll solve for payment. We'll press CPT PMT. And here we have our payment of $599.55 monthly for this fully amortized 30-year mortgage. You'll notice that this payment is represented as a negative number. This is by convention with this calculator. Now let's move to another common example. Here we have an auto loan. Assume you receive a fully amortized 5-year auto loan for $10,000 at an interest rate of 6%. Payments for this loan are made monthly. What's the dollar amount of each payment? In this example, we have a 5-year loan with monthly payments. The number of payments, 5 times 12, is 60. We enter this by pressing 5 times 12 equals N to set the number of payments. And the interest rate also has to be adjusted once again. We'll press 6 divided by 12 equals IY to set the interest rate. We'll now enter our present value for the loan of $10,000. We'll put in 10,000 PV. Since we're paying the loan down to 0, it's fully amortized, we'll press 0 FV. Then CPT PMT to get our payment. Here we see our payment is $193.33. Again, represented as a negative number. This is by convention. If you found this helpful and would like to see more videos like this one, please like and subscribe below.